9 days. I go, what the heck? I go, Santa Claus will be back by the time Blake gets around to coming back. But at least I know. So now I know it's going to be Friday, from Friday all the way through next week. Okay.
Friday to Friday, yes, that'd be correct. And yeah, so I'm not gonna spend a lot of time chit chatting with you today. Not that I don't want to. It's just
thanks a lot. I appreciate it.
We've got
I'm
Nick.
joking.
She's gonna be coming on today.
That's great. Yeah, that's great.
Yeah, and so I don't know if you heard yesterday. Yesterday, what had happened is I was I was going to leave. We were going to leave after the NBA Finals. We were going to just head out a little late. We had a barbecue, and I ended up watching the finals anyway. But what had happened is we had my cousin over and her family. They happen to be in Flagstaff as well, so they came over and barbecued before they. Everybody wants to avoid the heat, because it's 100 and it was 100 and almost 120 degrees this weekend here.
Oh my God.
I know, and so everybody's up north, wanting to avoid the heat. And as her nanny called, her nanny was apparently up in Flagstaff as well for the weekend with her family, and she called her and said, "Hey, have you guys made it home yet?" They're like, "No, we're still up here." She's like, "We've been in bumper-to-bumper traffic for 5 hours." And yeah, so there's only one main highway going down the freeway. Oh my God, gold is just crapping right now. Oh my God.
We were telling people. I told people, I go, it's getting ready to fall. I go, you know what? This market acts like it's going to fall. It's trading at 1282. And I go,
Well,
it looks like it's
yeah,
fall.
it's definitely coming under some pressure. Anyway, the long story short, there was already a backup, and then a trailer or a truck pulling another semi. So it was a semi pulling another semi, like the one that was broken down. Apparently lost control of its brakes, and it slammed into 10 cars that were already backed up.
Oh my
And
God.
yeah, so it went full speed right into it ended up taking out 10 different cars. And people were already sitting on the side of the roads, not able to move, because you're on a mountain, so there's no way to really move. You can't turn around or anything. To make a long story short, that truck hit an SUV. It was spun. It rolled like 30 times, and unfortunately, it killed a little boy. And so yeah, they didn't actually free up the freeway completely until like 1 or 2 in the morning. We left at like 5 in the morning. So I just I by the time I got home, I couldn't obviously make the morning edge. But yeah, like a lot of people were stuck on that freeway for 5, 6, 7 hours, and it's just, so we ended up, because it was getting late as it was, I just ended up staying the night at our family's house till, for like, we got up at like 5 in the morning and hightailed it out of there. But yeah, I appreciate you covering. It was just kind of just very unfortunate series of events, and the other way I could have went home, I could have taken a 4 or 5 hour trip going the other direction, but I didn't want to do that because it's more switchbacks and it's in the dark, and there's I've got my family in the car, and I decided to take the safe route. And
thing to do. Yeah, that was smart.
So appreciate it. I appreciate you filling it. So hey, we're gonna have Nick Trades on. She's coming on in an hour, and yeah, it's gonna be really exciting. I told her yesterday, I'm like, we're gonna put aside the political comments, because it's not right now. It's not about what you think, what you feel.
Exactly.
It's gonna be the market reaction to what's.
And that's enough there. With the moves that we've seen, holy smokes!
I know. I mean, if you look at everything that's happening right now, I mean, it in my opinion, and I'll give you my quick opinion really fast. It seems like the market is obviously pricing in what we thought would be the case. Is the UK voters are probably going to get a little weak at the knees, or at least
I got to give you props. I got to give you props. You're the one who said that. I said I think they're going to leave. You're the one who said they'd remain, and you were spot on. At least so far with the polls.
But I guess it's not over until the fat lady sings.
Exactly.
And so
that phrase was actually coined by a sports writer here in San Antonio, and it's now a famous saying that people use now. It's not over till the fat lady sings, meaning the opera lady.
Yeah, the I didn't know that the person was from San Antonio. I had no
Yeah,
idea.
Dan Cook. It was coined about 30 years ago. Now it's a real famous saying. Now it ain't over till the fat lady sings.
Well, it's not going to be over until the fat lady sings today, and I tell you, or on Thursday, and even though it seems right now that the everybody is swaying towards staying, or remain, it's still going to be a real close race, and it's going to be a close vote, and I think it's going to come down to the wire. And the question is how's the market going to react? And I'm interested to hear Nick's point of view.
Hmm.
For a lot of different reasons. Obviously, she's from the UK and she lives
Exactly.
there, and she's obviously got some skin in the game. But I'm interested to talk to her about the reaction, because I have different scenarios that I've already plotted in my head, because I'm going to be in Hawaii. So I'm following going into next week. There are some things that I want to do if there is a Brexit. There are things that I want to do if there's a Remain, and I want to talk through some of those ideas with
Mm.
Nick, and who's obviously who's a little bit more sensitive to the situation. So it's going to be a really fun day today. But I have to get through the morning analysis, and so therefore I am going to cut my conversation with you short.
Okay.
Yeah.
But
So
make sure you tell Nick I said hi.
of course,
She's
absolutely.
got the most awesome voice. People you laugh, but I'm not kidding. What a voice! Holy smokes!
Well, yeah, that's a typical American, just loving the British accent.
Her British accent is just like off the frickin' charts. But anyway, yeah, I'll enjoy.
I
I'll be
wonder,
looking forward.
I wonder if British people look at us and go, "Wow, what an American accent."
I don't think so. I've never heard that.
Those guys sound like a bunch of dumbasses.
Exactly.
Who are these are freaking stupid people. Anyway, all right, man. Hey,
Okay.
have a great one. Thank you so much for stepping in yesterday. It was like I said, I had to take the safe road,
Oh heck
safe
yeah!
route.
That's the safe thing is a smart thing, and that's it. Especially in that situation, you just don't play around. It's not worth it.
Yeah,
But
yeah.
I'll see you in the chat room.
Sounds great. All right, thanks, Paul. Appreciate it. All right, traders, good morning. This is Blake Morrow. You were listening to the Morning Edge webinar. We're not, like I said, we're not going to fiddle faddle around today with a bunch of, but man, this yen is spiking up too. We're obviously seeing a lot of movement today, and there's before we get into the charts, which we're going to start the analysis here in just a couple of minutes. Couple things that I want to point out is that we do have, Mario Draghi is speaking a little bit later today. He is talking in Brussels. He's talking in Parliament, so we could see some movement in the euro. We obviously have Janet Yellen, she's doing her, what was coined back in the Alan Greenspan days, the Humphrey Hawkins testimony. It's a semi-annual testimony, and she's going to be talking to. Is she talking to Senate today, or I always get the two confused? And she's talking to the Senate Banking Committee today, and then tomorrow she'll be talking to the House Financial Services Committee. So she's going to be talking today, and my assumption is she still wants to leave her options open. And as I've said for the last month or whatever, she's gonna leave the door open, because if the UK stays, which looks increasingly likely, although I think it's going to be still a very tight vote, but if the UK stays and the employment picture improves this month, so we get June's numbers, and it looked like May's numbers were maybe more of a one-off, and we get a bounce back in employment. I think that leaves the door open for a possible rate hike from the Fed, maybe even as early as July. So I think she wants to leave that option open, and so her testimony today will probably reflect that. Although, obviously there can be some volatility today, and I think that's going to be a pretty exciting event for us that trade currency. So we're going to have to be obviously prepared for that. As we inch closer to the to Thursday, man, talking about like a big day, with the vote, with the Brexit or Remain vote. And again, my opinion doesn't matter. your opinion, frankly. If you live outside of the UK, it doesn't really matter a whole lot either. But you know, the vote is going to produce a lot of volatility. Unfortunately, and I'm going to say this, I think a lot of the edge is being taken off right now as the market is pricing in more of a Remain vote, and so I think that if the UK votes to stay, which, you know, like I said, it seems like it's swinging that way from an outsider looking in. You know, what's going to be the, you know, what, you know, how much reaction are we going to get when, you know, you got probably, you know, most people already covering up shorts, or, you know, or preparing for a Remain. You know, I don't know if there's going to be much reaction. Obviously, the outlier is going to be if the UK votes to leave. That's going to create mass chaos going into the next couple of weeks of trading. So I think you're getting a lot of people that might have been more on the Brexit camp and vote and trading towards a Brexit move that that now has, you know, covered up their positions and just kind of, you know, standing aside and saying, well, I'm gonna make a trade, you know, once or if, you know, something happens. And I think that's where we're at today. So anyway, what we're going to do is we're going to get ready for today, and we're going to go through our analysis. I want to get it all done before Nick gets here, so I want to get started without further ado, because I want to make sure we have ample amount of time. You know, yesterday, obviously I didn't get a chance to do my bias chart, even though Steve Bealby did a bias chart and he put one together for everybody. I want to make sure that I do the analysis today and get us all up to speed. All right, so let's start with the euro dollar. And the euro dollar has been, you know, the euro dollar has been somewhat mixed, but, you know, the one, if there's one currency out there that I think is going to really benefit from a Brexit or a Remain vote, which would be, you know, the UK staying, is I think the euro would be probably the currency that will really benefit. And a lot of people think that, you know, maybe the cable, you know, which I would think that the cable spikes up towards 150, but I think the euro dollar could really recover as well. I think this is one currency that could do really well if the UK votes to stay. You know, we could very easily be trading back at 116 or maybe even slightly higher. But if you look at the charts right now, you know, and in my opinion, it looks like that we are, you know, roughly developing some sort of, you know, consolidation, and that makes a lot of sense. I mean, doesn't it make a lot of sense? I mean, it, you know, if you're like, well, yeah, it looks like we're going to stay, but you know, there's still that risk, you know, in the UK, then there's probably going to be some volatility here. And then you got, you know, again, you got Janet Yellen that's speaking today as well, and you might get a little bit of a bump in the dollar, or, you know, maybe a little recovery in the dollar ahead of Janet Yellen. So, or after post Janet Yellen. But regardless, to me, it looks like we're consolidating, and you know, which is good news for us for the next couple of days, meaning that we know kind of what the breaking points are. You know, if you look at the most, here, let's pull up a 4-hour chart here. That 88% retracement looks like that's what's holding us now, which is great news in my opinion, meaning that if we break 113.80, we know that it's going to be an upside breakout in the euro. So I think that, let me put that right here, put this right here. Okay, so if we break through these highs, you can see how I think we took out the lows, took out the highs, which typical when you're consolidating, it's kind of whipping everybody around. 1380, you know, that's big resistance. I think if we can clear that today, which I don't know if we're going to be able to, but if we clear that today, I think that would be a really good sign that we're going to see some continued dollar weakness. All right, so if we break through 113.80, I'm just going to write that down as key resistance today, 113.80, 80, and that's key resistance. If that breaks, you know, we're going to get probably a substantial squeeze in the euro. Now, there's still a gaping gap from this weekend, which comes in at 112.70, which seems likely that we could, in my opinion, seems more likely that we'll come down here and get right to mid-range, because the market likes to frustrate both sides, doesn't it? I mean, that's pretty typical of the markets just in general. You have a break below, trips up all the stops, screws them. Trips breaks above the high, gets everybody long, squeezes all the shorts, screws them. We come back right back down to mid range, right? That's, in my opinion, very logical. As illogical as it sounds when it's happening and you're getting stuck, on the short side and then on the long side. To me, as an FX trader, it's very logical that we would take out both sides just enough to piss off everybody, right? So 112.70, I think, is going to be support. I don't think it's great support. I think that filling a gap at 112.70 seems very logical to me. Okay, it's not great support because I think just because we fill the gap doesn't mean we can't come back down to 112. If I had to guess, and this is just obviously a guess ahead of Thursday, if I had to draw it out for you and say, my magic 8-ball says we're going to do this till Thursday. That's what my magic 8-ball says. And now that doesn't mean my magic 8-ball is correct, because right now, every time I flip it upside down, it says try again later. So it doesn't mean anything, but for us, it seems very logical, because as we develop some sort of triangle, that means that going into Thursday, it's going to produce some sort of breakout, or Friday, I would think, whether it's a big upside break or downside break. Okay. All right. So anyway, that's the euro, and we're going to put us in a range as we have been. All right. So the cable. Let's talk about the cable. That's technicals. Now, I tweeted something earlier about the pound. It's like you kind of got to throw out technical analysis at this point. I mean, we can try to use it as a basis of making decisions. And I will tell you, I have a pound short from yesterday. I have it at 146.74 is my cost average. It's really small. I have my stops above 148. Okay, and I just plan on sitting in it, as long as I can. So hopefully I don't get stopped out. But it's small. Even if it comes down to 146, where I think it's going, I'm not going to make a whole lot of money. I'm not going to lose a lot if it goes above 148 either. It's just more of kind of having a position on and playing some of this volatility. But when you have so much volatility, you got to play it in really small quantities, which gives us two ability for a couple of things. A, to be able to sit through the volatility. You take smaller positions, then obviously you can withstand all this craziness, and this way you don't obviously get too attached to your positions, because the last thing I want to do right now is get too mesmerized by any position that I'm in as it's getting whipped around. But if you look at yesterday's move, and I drew this out this morning because I kind of wanted to see where we stopped and why. We were looking at this, we had this ascending wedge. We broke out of it like it was like a liquidity trap. The bottom fell out, and if you were listening on the Lunch Money webinar, I had a really small position at the time. I closed out at half of it when we got to 145.90. I want to say 92 or 95. I closed out at half of it. Then I entered more back when we got to 146.50. Whatever. My cost average was 146.74. It's still a really small position. And then, we have actually today, if you take the high from yesterday to the low, that spike low, we rallied to 161% extension. Okay. Again, magic, maybe. Is it luck? Probably. Does it have more to do with like technicals? Probably not. I think that when you're talking about fibs, though, especially 161% extensions, they tend to be very exaggerated emotional type of moves. So that it makes sense to me that we would have hit that. What also makes sense to me as well is that we may have overshot the resistance here. The resistance. We may have overshot it just enough to stop out a few people, right? For people that were shorting here, put their stops right above 147, whatever the highs here, 70, right? Highs 147.69. So you had your stops right above that and said, there's no friggin' way we're going to get above that. Well, you just got stopped out and then reversed, right? That's pretty typical Pretty typical. So right now, that is going to be key resistance. Key resistance, in my view, is going to be 147, whatever today's high is, 147.83. So I'm just going to put in 147.85. That is key resistance for today. Support at this point, if we drop from here, it's how far are we going to go down? I would think that any dip now to 146 is going to be probably very well supported, because if you think about yesterday being an overshoot, which it probably was, 146 is probably going to be very, very good support for today. Okay. Okay. Let's see. 146. That should be really decent support for today. I honestly, I still think we're going down to like 145 ahead of Thursday. The reason why I say that is because, the market is any which way you slice it, and I'll talk to Nick obviously about this, and I don't want to, overstep my boundaries with the conversation that I'm going to have with her in a little bit. But I think ahead of key events, you get overshoots, and then you also get things moderating, kind of backing off towards, they revert to the mean a little bit, because any which way you slice it, there's still risk, going into Thursday's vote. You can as much as you can say with as much certainty as you have in your soul, the UK is going to stay. The UK is not going anywhere. Voters are going to vote to stay. They're going to wussy out when they get to the polling stations. They're going to say, I'd rather be more conservative. And I've said it all along that I think the UK voters tend to be less likely to rock the boat. So when they sit down and they are faced with yes, stay, yes, or stay or leave, most of them are probably going to vote the status quo, which would be vote to stay. That has been my view for a long time. But regardless if you feel that or not, you have to admit there's a lot of risk going into Thursday. So as much as we've rallied just from last Thursday, I would venture to guess that we moderate somewhat, and ahead of the vote. I would think we would. So like I said, I wouldn't be surprised for us by Thursday to be somewhere down here towards 145. In my opinion, and I'm trading as such. But again, I'm in such a small position that even if we get down to 145, I'm not going to make a lot of money, and we get above 148, I'm not going to lose a lot of money. It's kind of taking a stab at it. Kind of, I think I'm more or less finding something to do in a market that's tough to find something to do right now. that's kind of the route I've taken at this point. So anyway. The pound, I think, is in a big freaking hot mess. It's a big hot mess in a big range. We are in a range right now. We happen to be at the upper end of the range in my view, but we are in a range, and we have been for a while. All right, let me do the Swissy before we leave, and like I said, we're going to have another half an hour of analysis. I'm doing all the our normal morning analysis. I'm getting it done before Nick comes, because I want to make sure that we don't do all of the basic stuff when she's here, because I want to make sure we use our time wisely. One of the things that I've noticed with the Swissy, and this is one thing that if you think it's a slam dunk that the UK is going to stay, all I have to do is really point you in the direction of the dollar Swiss and the Swiss franc in general, because I think the Swiss tells you the real story, not so much the cable, because the Swiss franc is a play on safety. Right, and in my opinion, has always been, and it will continue to be, if the UK votes to stay, I think the best trade out there is going to be long the pound Swiss. I think the pound Swiss, because no one wants to stay in a long Swiss franc position for any extended period of time. They tend to go to Swiss francs for safety, because I'd rather pay a little bit of interest to the Swiss National Bank than risk losing 5 or 10% in a position that I have. So I'd rather be safe with the Swiss franc in the near term, but if I don't need it and the UK is not going to leave, then I'm going to sell my Swiss francs and buy back cable. So I still think the pound Swiss is probably going to be one of the better trades out there. Euro Swiss, dollar Swiss, those are going to be some really good long candidates should the UK decide to stay. But if they leave, the Swiss franc is going to be in major demand. So the reason why I point all this out is because the dollar Swiss, regardless of what's happening and all the noise out there, regardless, the Swiss franc is still very strong. And that tells that in my opinion tells the story of the nervousness of the market. Okay. This is support, and it's not very far from where we're at. I mean, we do have further support at 95.50, but we have support really here at the lows that is at 95.70, and we're almost there, So I'm going to write down 95.50, 95.70 as support. Okay, resistance. If we get above 97 cents, then that the market is more relaxed about the whole Brexit vote. Frankly, I just don't see this being taken out, not before Thursday. But that's again, this is my opinion, and opinion are like buttholes. Everybody's got one, and they're usually smelly, right? Just the view you needed at 4:26 a.m. on my time, right? Okay, so the resistance here is at 96.85. By the way, if you guys are new to the morning edge, I've been doing this analysis for everybody, with everybody. This is our 14th year. So glad you guys finally made it. Welcome, and do it a lot. We do it every morning at 7 a.m. Eastern, 4 a.m. my time. I start every day. So glad you're here. All right, I'll be back in a few minutes. When I come back, we're going to finish all this up before Nick gets here. So actually, she's probably here already, but I want to make sure that we get this done before I unmic her. So don't go anywhere. I'll be back in 5 minutes. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and I'm back. I'm going to cruise through this analysis that I want to make sure that we go through today. So let's go over to the dollar yen. The dollar yen has been a great proxy for risk appetite and risk aversion. And as I've mentioned to you guys the last few trading sessions, any move up to 105.50, you have to imagine there's got to be a wall of sellers up here. I'm going to be one of them. I think I haven't put out an order yet to sell 105.50 yet. But look, this 105.50, just so everybody knows how important this is. I don't know why I deleted all my lines from last week. I accidentally deleted everything, so you guys know I usually keep my drawings here every day. 105.50 is such a big deal. It was a big deal for so many reasons. We had known that this was obviously a breakout point. Key resistance, support, head and shoulder pattern that developed into completion. Most of us that are here on the webinar, we shorted at 121, covered down here at 113, shorted again, covered down at 108-ish, and then kind of been on the sidelines most of this time. I think what's been most impressive about this move that we've seen in the yen is the strength of the yen despite the bullishness that we've had in equities. And that, to me, is very, very concerning if you are a bull in the yen pairs, or if you're bearish the yen. I think one of the most concerning things is that you have equity markets that have been so strong, yet the yen has been unresponsive. So in my opinion, any rally up to 105.50, you have to use it as an opportunity to be on the short side. And this is going to be critical resistance. Now, if you see me put an asterisk there, that means that it is a very important level. More asterisks, the more important it is. And I think 105.50 is going to be major wall of resistance for anybody who's trading on the long side. So if you're on the long side and you're like, well, I mean, even if you look at most recent price action in the last couple of days, you would expect a bigger move out of the dollar yen higher, or a weaker yen, and we just haven't seen it. So that's got to be concerning to anybody who's bullish to the yen right now, okay, or bearish to the yen, excuse me. Now, support obviously is pretty key here at 103.50. And I don't know if there's a lot to do with the dollar yen right now. I mean, if you look at it, it's like, do you really want to be on the short side at this point? No, I'd rather be short up here. I think you can manage your risk a lot better. Do you want to be on the long side? Probably not. You got support down here, and if you wanted to be long, down there would be the place to do it, I would think. I have to reiterate that I really believe right now that the weakness in the yen pairs or the strength in the yen can't be ignored. It really can't, okay? So 103.50 is pretty key support in my view. If we break through 103.50, then you know the market has gone completely risk off, all right? And that is very important to understand at this stage in the game. All right, let's take a look at the Canadian. Now, you might have seen this chart that I had up here earlier. You know, we're talking a lot of consolidation in the markets right now. I think the euro is consolidating ahead of this Brexit vote. I wouldn't be surprised if the dollar Canadian is consolidating ahead of the Brexit vote. And you know, we have, you know, this triangle consolidation here. So any move down to 127.25, I think is going to be very well supported. Now we're this far supported at 127.50, which is the 786 retracement of the most recent up move. But even if we hit new lows, I doubt that, you know, even if we hit new lows, I doubt we're going much further than this, not ahead of Thursday. Okay, like I said, there's still a lot of risk out there. So even if we dip down like this, I think you want to use that as an opportunity to be on the long side. I would say the same thing if we were up here. I would say you'd want to use it as a short if you can get it. But right now, 127.25 I think is going to be really key support. Whoops. Okay. Resistance. Well, there's still a gap here, way up at 129. Now, I don't know if we're going to go to 129 today. I think that's some pretty high hopes if you're trading on the long side of the Canadian. But I'll tell you this much: I've got the Aussie Canadian, Euro Canadian longs, and I'm doing fairly well with the Aussie Canadian. The Euro Canadian's under a little bit of pressure, but I'm trading Canadian to the short side through crosses, and that's right now. That's my weapon of choice is to try to stay away from the dollar pairs at the moment, even though I've got a little pound dollar short, but I'm trying to stay away from the dollar pairs just because there's a lot of risk associated with them, especially ahead of the Brexit vote. You got Yellen today, so kind of want to, you know, keep those, you know, to maybe reduce some risk, you know, start looking at some cross rates. 128.25 be previous support there, previous support there. You can see all these spike highs. They come in right around that 128.30 actually, 128.30. That's not great resistance, but it is resistance. Okay. I think if we can get above the 128.30, it'll take that downside pressure off. It'll take us back to this gap fill over here around 129, which would end up being right in the smack dab middle of this, you know, godforsaken range that we're developing. Again, I think ahead of the Brexit vote, you're going to find that we're going to find ourselves mid-range in a lot of these pairs. You guys, my normal listeners, people that are here every day, they know that before big events, jobs reports, interest rate decisions, Brexit vote would qualify. Before big events, the market tends to get mid-range. You know, it's not often that you'll find yourself at the very top or the bottom of a range ahead of a big event. So, you know, going into Thursday, obviously, some big events, you know, we're probably going to end up going mid-range a little bit, you know, as the market kind of gets prepared for a bit explosive move higher or explosive move lower. And the dollar Canadian is going to be very much in that camp of very volatile currencies because it tends to move with risk appetite and risk aversion. It tends to move with volatility. So as volatility rises, the dollar Canadian tends to rise. Very strong correlation there, and obviously to crude oil as well. So again, some food for thought. I think that maybe a dip to 127.25 would be a nice place for longs. If you want to be on the short side of the dollar Canadian, maybe once you get a gap fill, the better place to be on the short side would be up here at 129 rather than, after seeing a fall from 131 basically to 128. Yeah, last thing you want to do is be caught on the short side as the thing's trying to make a turn. Okay, let's go over to that was the Canadian, let's go over to the Kiwi. So the Kiwi has pushed up towards resistance. Now, I say pushed up towards resistance. We're right here against highs, and now I'm going to show you a couple of things that I've been drawing here. Okay. Now, the Kiwi, we have a 618 retracement. Now, your spikes and my spikes might be slightly different based on what your data feed from your broker gave you. Remember, the reason why we came down here last August was the Dow was down 1,000 points pre-market. You might remember that day in August. All right, the spike low in the Kiwi that I have here is a little different than, like, let's say, a trading view here is if you go over to the New Zealand dollar. The spike low here is just a little different, right? But regardless, you're at a 618 retracement. Let's go. Whoops, wrong chart. Okay, 618 retracement. You've got a 38% retracement from the high at just above 88 cents. Okay, 38% retracement. Trendline resistance that have come in. You have channel, what I consider is channel resistance from channel low, channel high. Okay, and we're right at previous support too, which comes in around 72 cents. So it doesn't surprise me that we hit brief new highs. I'm curious to how far we're actually going to go from here. You know what I mean? Okay, if you take spike low here is 71.74. Right here is 71.85. The overnight highs are 71.60. Can we go to 71.75? Sure, but I don't know how much higher we're going to go. 71.75. That should be pretty key resistance, in my opinion. All right, and I still think we're in a range. I think we're at the upper end of our range, but I still think we're in a range. All right, now from here, support. Let's see. Roughly, minus that spike there. What I'm trying to do is I'm trying to get as many touch points as possible. Here, 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 overshoot, which leads me to believe that 71 cents right now is pretty key support. So as long as 71 cents is valid, actually we'll make that, what is the high there? 70.92, so 70.90. As long as that's intact, there's going to be some upside pressure. If we can break 70.90, it's going to take the upside pressure off. But I still think we're in a big range. Okay. Okay. All right, let's go over to the Aussie dollar. Trying to cruise through these really quick, guys, before Nicola gets here. All right, so here's the Aussie, very similar to the Kiwi. Now the RBA monetary policy meeting minutes overnight, they basically are, saying that the RBA is on hold. Unless inflation expectations really start to drop again, I think the RBA is going to stay on hold and kind of let what they consider ultra loose monetary policy work through the market. Now, you could arguably say that we have a head and shoulder pattern. We have a little cup and handle pattern. That's possible. I tend to look at cup and handle patterns. We're at the very top of a trend. So if we went like this, whoop, up here, that would be something. Right now, I don't know. I'm not really in that camp. Okay, we hit 127% extension, a little bit of overshoot. We have some resistance right here at 75 cents. I think we marked up 75 cents yesterday as resistance when we talked about it during the Lunch Money webinar. I think this is resistance right now. Can we push past it? Sure. To me, it seems squeezable. Now, if we do push resistance here, upside will probably be capped at 75.50, which is the 161% extension of that last move down, but also would be previous support here. So 75.50 seems like a very logical resistance for the Aussie. And if you're in the camp of, China's going to hell in a handbasket, and the Aussie's going to, Aussie's going to 60 cents sooner or later, I don't really care, it is. I mean, if that's your attitude about the Aussie, well, you might want to short it when it gets to 75.50 versus trying to short it right now, right at 75 cents, because in my opinion, it looks like it's going to squeeze a little higher. In my opinion, it looks like we're going to squeeze above here and just try to trip some stops. This market is about, catching people wrong-footed. So we probably will end up getting up to 75.50 first, right? Now, support at this point, 74.50. You can see even on the 4-hour chart overnight, we held it. So anybody who's long is not worried about the Aussie, as long as we're above this 74.50 level, roughly. Okay. If you're long, you're like, hey, as long as 74.50 holds, I'm not selling it, right? If you're on the long side. Okay. All right. So there's the Aussie. Let's go over to the dollar index. Now you got to be really, 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 really careful with the dollar down here. Okay. Dollar index, as you guys know, we're near a lot of support. There's a truckload of support down here. So I've had this this red line and this red line drawn out here for forever and a day. Okay. Now, if I delete it really quick, let me delete that. Let me delete this. Okay. And let me delete that, and let me delete that for a moment. And let me delete this. Okay. If you take a step back and know why we're here. Okay. Take this low, spike low here to the high. Okay. There's a 618 retracement that held us the first time around, right? That held us when we were here. We knew that was big when we were there a couple weeks ago, and I said, you don't want to be on the short side as you're probing the 618. You're near a lot of support. We bounced aggressively. We got up to that resistance. I tweeted out the chart, said, look, that's really key resistance in the dollar. And I tweeted out the chart right when we were literally at 95 and a quarter. Whoops, didn't want to do that. Put that back. Okay, damn it, I want to do that. All right, there we go. And we rejected, and now we're back down at support. So how important do you think this 93.30 level is in the dollar index? Probably pretty key. And that means that, looking ahead into Janet Yellen's testimony, if we break through 93.30, then that's going to open up the door for a move back down towards 92.50, maybe even a 92. All right. I think I can get rid of this now because that's all happened. I can get rid of this too for now because obviously we're not breaking that now, not at this moment in time. So any move below those lows, it's going to open up some downside. Now we have a gap to fill here. There's a lot of gaping gaps, if you will. That comes in at 94.10, and then there's hold on. Let me fix that. I have to take the no. So any move back up to 94.20, 94 and a quarter, any move back up to 94 and a quarter is going to be, some pretty key resistance. Okay, so Oh, that needs to be range too. All right, dollar index. I still think we're in a big range, obviously. And even if we break lower, there's so much support down here. I'm sure it's still fresh in a lot of traders' mind being short the dollar index when we did that false break below and then it ramped up like this. I'm sure people that are short or are thinking about being on the short side don't want to be on the short side down here with the risk of Janet Yellen possibly raising rates next month if we have a decent jobs report this month and we have the potential of the UK staying, which I think are the two prerequisites for Janet Yellen and company to raise rates next month. As long as the jobs report in May looks like an anomaly and the UK votes to stay, which looks increasingly likely, then Janet Yellen may indeed raise rates as she wants to continue to normalize. And if that's the case, the dollar index is going to rip, and you don't want to be on the short side when we're down here, right? So those are risks as you start breaking lower. You're like, I don't know if I want to really be short. Okay, let's go over to the peso. Now the peso, I ultimately want to be short. Now I'm going to be very simple here regarding the peso. If the UK votes to leave, we're going to 20 just on pure risk aversion, and I want to short the hell out of the US dollar Mexican peso up here. Would be my trade of the somewhere up here. I mean above 20, whether it's 20 or 21, whatever the exchange rate is. I want to be short the US dollar Mexican peso up here. That's like my trade of the second half of the year. All right. I don't know if we're going to get that opportunity. I drew that out yesterday because we were just talking about the possibilities. Obviously you'd have to have the UK would have to vote to leave, and we're going to have to see some risk aversion to get that there. What seems more than likely is the UK is going to vote to stay. We're going to have a failed rally attempt. We're going to make a little lower low, and then if we break through 18 or 1810 or whatever this is, if we break through 1805 eventually, then that's gonna trigger a move, the eventual move, in my opinion, back down into the teens. So if we break through 18 and change the mid-teens rather, that'll take us back to 16 or 15 on the exchange rate, and that would be on a stay, if the UK votes to stay. But hey, I don't know what's going to happen, and I'm not going to sit here and pretend to tell you that I know exactly the way the UK voters are going to vote. I think they're going to be, not wanting to rock the boat, but that's just an opinion. It doesn't mean I know anything. I just think that, that the UK voters are probably going to get a little weak at the knees when they get to the, voting stations. But again, that's just me. All right. So right now, we hit a new low, relative strength didn't on the 4-hour, but any dip to 1845 will probably give us some, still a very high traffic area, a lot of business being done around here, so any move to 1845 is probably going to be support today. I don't think it's great support, but 1845 should offer some support. Anybody who is stuck on the long side probably wants out, so if you get a bounce from current levels, it's bounced back to like 1880-ish, will probably offer place for you to sell, maybe 1875 right here if you want to be on the short side. It's not great resistance, it's just resistance. I still think we're in a very bullish trend. I really think that the US dollar Mexican peso is in a very bullish trend, but the rejection up here at 19 may eventually push us back into what we would call a range. Let's go over to the Norwegian krona really quick, and then we'll do the Swedish krona. With crude coming off, the US dollar Norwegian krona is starting to bounce, and as you can see, we're kind of in between head and shoulder pattern, completion, inverted head and shoulder pattern, haven't completed yet, but maybe it was enough to stop some traders out over here. We might be in a upward sloping range. We happen to be in the middle of this range, so a dip towards 812 and a move up towards 850 I think those are your range boundaries. I think if you want to trade the U.S. dollar Norwegian krona, you have to do it closer to the channel resistance or channel support. Trading the U.S. dollar Norwegian krona right now seems like to me very much a coin cost. Coin. Did I say coin? Coin cost. Coin toss. So 1812, 1850, or 812 and 850. Excuse me. 812, 850. That'd actually be pretty key resistance, I would think. But we're range bound. All right, let's go over to the Swedish krona. You guys know with me, I don't like going on a bias chart and putting a bunch of ranges. It is what it is, though. You know, I like to be very biased. I like to be, you know, having a technical picture that shows us, you know, extremely bullish or extremely bearish markets, but that's just not the case right now. Support here in the Swedish krona, probably 818, and resistance, you know, obviously the false breakout here is going to bring in a lot of sellers if we get a rally back to 838. So 818, 838, and we are range bound. 818, 838. All right, and here's somebody's microphone. Is that you, Kip?